Hey everybody, welcome to another exciting edition of Zach's Live Trader. I am Dave Bartosiak, and I'm probably going to be grinning ear to ear all day. You know why? You know why? Huh? Guesses? Guesses? That's right, the Cubbies won last night, so I don't even care what's going to happen in the stock market. It's all good. But still, I am going to bring you serious heat today, because we're going to be talking about another San Francisco organization that I'm beating up on. In this case, it's Wells Fargo. So they're going to be reporting earnings after the bell on Thursday, I believe. I'm sorry, before the bell Friday, along with a slew of banks, including JP Morgan, Citigroup, some other guys. So this was basically the one that I wanted to talk about because there's been so much action surrounding Wells Fargo. Now, for you guys who are tuning in here for the first time, thank you so much for hanging out with me here on Zach's Live Trader. This is part of our free stream. So basically what's going to happen is we're going to go through the detailed estimates page, the price and consensus chart, and the options chain. I'm going to give you bull trade, bear trade, and my humble opinion which one's the best one. But you're not going to be able to see the outcome of this trade. You won't know how to manage this trade unless you're hooked up with Zach's Live Trader. So to make sure you get hooked up with that, shoot me an email, livetrader@zax.com, with your questions about how do you get your 14-day free trial to Zach's Live Trader. And I'll make sure you're on our distribution list to get the links for all the new videos as they're coming out, as well as, random notes that pop up in my head from time to time. So again, livetrader@zax.com. Make sure you shoot me that quick email. I try to respond back relatively quickly to those emails. And again, thank you everybody for the emails that I've been getting recently. I've gotten plenty of suggestions for videos that I should do in the future, not just in terms of which of these earnings plays we should use, but also what sort of educational topics you guys want me to cover and ways that we can make this show better. So we are working on a lot of things, working on some new graphics, we're working on some cutaway pages, working on posting the information quickly so that everybody gets it. So a lot of fun stuff in the works here at Zach's Live Trader, so make sure you don't miss it. Okay, now back here to Wells Fargo. So they've been in the news recently for a little bit of scandalous stuff going on at Wells Fargo. I even did a video about it for my Trending Stocks video series, which is pretty funny, where I point out the lighter side of Wall Street and I get to make all sorts of jokes. Helps me get out my aggression. So we did a video on them because what happened was a lot of Wells Fargo employees decided to open up credit cards and accounts for people without them knowing it. So that's pretty funny. And then the person who was in charge of the division retired before they got fired and ended up making a ton of money because they chose to retire and not get fired. And Wells Fargo didn't go after them as if they had no knowledge that this was happening underneath their watch or while they were at the helm. But in addition to that, which is even better, whistleblowers apparently were calling the HR line telling people that, hey, there's a problem here at Wells Fargo where people are opening up fake accounts, and they fired the whistleblowers. So now the whistleblowers have like a $4 billion lawsuit against the company. And then you had the CEO on Capitol Hill getting grilled. So add that up, and it makes for some fantastic theater over at Wells Fargo. Now, again, a lot of this is speculation, so I'm not going to come out here and say this is exactly what happened and this is how it is. Read the news for yourself. You can learn. I don't want you to make your own decisions based on just my humble, goofy little opinion over here, but I don't care who you are. This story is hilarious, okay? Especially when you start digging in the intricacies. So you've got that kind of looming overhead. Plus, the Fed rate hike hasn't happened yet this year, so I'm pretty sure it's going to happen in December. But we're talking about Q3 earnings here, not Q4, and certainly not Q1 of next year. So how's that going to play out when these guys aren't getting that net interest margin to boost their revenues and their profits at the banks? I don't know. Okay, so let's kick this off by digging into our price, consensus, and EPS surprise chart here on Zax.com. The single most underused and most valuable chart in the history of Zax ever. Take a look at the black line here. Corresponds to the price, which is the right y-axis. Now, the little green triangles are times when Wells Fargo beat earnings. And the little red arrows, those are disappointments. Now, these multicolored lines represent the evolution of our Zacks consensus estimates over time. Now, that Zacks consensus estimate is essentially a poll. We go ahead and we take all of the analysts who are making earnings estimates on the stock, put them together, and that's what you got. So this is not to be confused with a couple of Zacks guys going, I think it's going to go down. No, this is a consensus of all the estimates, all the analysts that we follow. Okay, now, something to point out here. Flat, a little bit of growth. Flat, a little bit of growth. Flat, a little bit of growth. While this is happening, especially with the growth numbers here, you see Wells Fargo going on the march. Very nice. From a $24 stock at the end of 2012 all the way up to nearly $58 in July of 2015 as these estimates continue to track upward. Okay, now fast forward. Since July 2015, what's happened? Well, these estimates flat, down, and now when you're looking at this gap between the estimates, that's hardly a gap at all. As a result, stock price has come down, right? Now, notice the slow accumulation upward here, the rolling over, the chop city, and then now we've still got some dips here, and there's rallies. People have been coming in and buying the rallies here. But if you notice, pretty much a hard stop, a hard top here, 51 for Wells Fargo, while this is a lower low, okay? Big uptick in volume too, because these guys have popped up on the radar, mostly due to the scandals that we've got going on, right? Because all of a sudden, everybody wanted to trade Wells Fargo. They were the big story. It's funny to me how these supervillains sort of mutate or morph over time, right? So for a while there, everybody hated Citibank. Even gave them a colorful name instead of Citibank. And then you had Bank of America. Everybody hated Bank of America. The whole robo-advisor stuff that was going on, right? And then Chase, I mean, they had it rough a little bit, but I feel like Chase was relatively unscathed as they came out of, the Great Recession. But certainly now I feel like Wells Fargo is the new villain. It's this new face of, what's wrong with banking that everybody can hate on and, Elizabeth Warren can get all fired up about. So they're just not in the good graces of the American populace right now. And then, of course, there's Deutsche Bank, but, they're German, so, we don't care so much about them here, right? But Wells Fargo right now is, I don't want to say the public enemy number one. I just want to say that they're being picked on. They're being picked on a little bit, okay? I'm not going to start crying like, leave Brittany alone, right? That's not going to happen. But you got to recognize when the sentiment is turned bearish on the stock, and sometimes it's bearish for no reason at all. Now, other times it's bearish for a significant reason. This price consensus and EPS surprise chart helps me weed out if it's there for a reason versus it's not. Okay, now let's take a look at what other analysts feel about the stock by looking at the detailed estimates page here on Zacks.com. Wells Fargo, Zacks rank number 3, hold, value C, growth of F, and momentum of F. Should not be surprising based on what we saw. Again, they're going to report before the market opens on Friday, along with the rest of the big banks. That industry is in the top 42% of our Zacks industry rank, so there's that. Tons of analysts covering it here for us, 13 different analysts, so let's see what the story has been. So somebody came out the last week and increased their earnings estimate for the current quarter and current year. But on the flip side, over the last 30 days, you've got 3 analysts who have dropped their numbers for the current quarter, 4 for next quarter, 3 for the current year, and 7 for next year's numbers. This is something that's kind of jumping out at me because, okay, so this year we're going to make 404, right? That's kind of what we're pricing in here, hoping for. Next year, 412. 404 to 412. 8 cents on $4. That's 2%. Essentially, EPS growth is what we're looking for out of shares of Wells Fargo. Now, I bet this is also making the assumption that rates are going to tick up a little bit. Good luck being an analyst for trying to figure out what Wells Fargo is going to make next year. Not only do you have the question of whether or not the actual bank itself is going to make money based on their sales and what's going on over there. But now you have to gauge public sentiment. What's going to happen? Are they going to lose customers as a result of the scandal or not? And what's going to happen? Plus, you've got the Fed. So now you're going to predict what the Fed's going to do next year? Good luck, buddy, because pretty much everybody has gotten it wrong, okay? I'm just going to go out and I just want everybody to know, in January, I said one Fed rate hike. You can look at my commentary. I said one. It's going to happen once. That and $1 will get me on the bus, folks. Actually, that and $2.25 here in Chicago will get me on the bus. It's worthless, but it's fun. It's pride. I take pride in stuff like that. You heard it here first. Okay, so I'll probably be wrong anyway, so who cares? All right, now, so that's the scene here. So not a lot of growth. Really hard to figure out what's going to go on with Wells Fargo. So with all that being said, I'm not concerned about all of next year, right? I'm a bit more myopic than that. What's going to happen as a result of this quarterly earnings report? What's on the table? What can we look at? So let's dig into these options. I'm going to go ahead and I'm going to give you a bullish trade, a bearish trade, and my humble opinion of which one is the best. All right, now, looking at Wells, we do have some weeklies on it. So I'm going to pull up the weekly options here. So these are going to expire the same day as the earnings report, okay? Now, the reason I do this is if I add up the cost of the at-the-money call and the at-the-money put, it gives me a nice, easy way to calculate sort of the implied volatility of the move. So it's what is Wall Street pricing in as an immediate reaction to earnings on shares of Wells Fargo. All right, so let's open up my handy-dandy calculator. So let's look at the money. So we got the puts and the calls here at that 45.50 strike price. 52 cents on the call, 52 cents on the call side. And what do you know? 52 cents on the put. $1.04, okay? Divided by the 45.50. So you're only looking at a 2.28% move on Wells Fargo immediately following earnings, okay? Again, big bank, right? That explains why we're only looking for $1. So that puts a range of 44.50 to 46.50 is essentially what this stock is pricing in, okay? If you just look at October 14th. Okay, now, as much as I love trading one-day options, you know, the weekly, the day of, I personally don't recommend trading options that expire the day of the earnings report because there's just so much that can happen on that day, okay? If the market gets totally beat up, this stock might go in one direction. If the market's in a huge rally, it can follow the rest of the market, okay? I like to give a little bit of time for people to digest the earnings report and see what's going on, okay? Because ultimately, these are still very short term. If I'm looking October 21st, I mean, so what, another week, you know? That's not that far out. Okay. So now, again, given these small moves, so the market's only pricing. Let me get my little marker back. So again, we were talking. Oh, look at what I did. All right, hang on. There we go. So the market's pricing in right now, kind of this. This is sort of the playing field that the market's looking at, right? This sort of 44.50 to 46.50 range. Doesn't seem like a huge range here, right? Not a huge move. Okay. Now again, I think what I want to do is I think that these might move a little bit more than the market is pricing in, okay? Just because I'm expecting a little bit more volatility out of shares of Wells Fargo because of kind of the scandals and such. But I don't think it's enough to compel me to put on a call spread or a put spread in either direction here. Again, earlier in the week, we went relatively aggressive with a put spread on CSX. And that has kind of had a little bit of an impact on my option strategy throughout the course of the week. Because you just don't, I don't want to swing for the fences every single time I put on an options trade, right? I mean, these are still relatively risky trades in general. So that doesn't, so I don't have to keep like trying to hit the home run to get 3 for 1 on my money or 2 for 1 on my money, and be supremely confident in it. I can win by hitting singles. You know who else hit singles? The Cubs did last night in the top of the 9th when they rallied against the Giants and then won. That's right. I only say that because the guy in the back, he's a Sox fan. All right, so let's take a look at the strategy I'm putting together here. If I was bullish on shares of Wells Fargo, I think what I'd want to do is I just want to sell some of these puts here. So I would go, clear out my area here. So I would go a little further. I don't want to go necessarily in the money on the put, right? Because I'm not that aggressive, but kind of at the money. So if I'm looking at this 46.50 to be short, and then this 44.50, so it's just $1 of a move, right? It is kind of tight. It's much tighter than the trade we put on yesterday, but we're going to get more of a reward here on the bullish side. So going to take in 74 cents. If I sell the 45.50 put to open, that'll be 74 cents in my pocket. Now, if I buy the 44.50 put to close, to open as well, sorry, that's going to cost me that 36 cents. So you're talking 38 cents of premium that I'm going to take in. Now, the money that I'm going to have at risk in this case is 62 cents. That's the difference in the strike prices minus the premium that I've already put in my pocket. So, still a decent rate of return here. That's almost a 60% rate of return I could get in a very short, 61.2% rate of return. Now, what has to happen for this particular scenario? Shares of Wells Fargo would have to trade above 45.50 at expiration next week, October 21st, okay? So really all you're looking for is the stock to tick higher a little bit and not sell off on earnings. So that's the October 21 short, the 45.50, 44.50 put spread, okay? That's the bullish play here, and that's a net credit of 38 cents, okay? That's actually a very nice trade. All right. Now, if I'm bearish now on shares of Wells Fargo, I'm going to do the opposite. Instead of shorting the put spread here, let's look at the call. Let's look at the money, right? These 45. Well, this is barely in the money. It's in the money by a penny, so I'm just going to call it at the money, okay? So this 45.50 call. So if I sell it, I get 73 cents, right? Sell to open the 45.50 call. That's a 73 cent credit. At the same time, I don't want to have unlimited risk to the upside. I want to cap this risk and I want to manage this risk. So what I'm going to do is I'm going to buy to open the 46.50 call, and that's going to cost me 32 cents. So if I subtract the 32 cents, that's 41 cents of premium that I'm taking in. Now, again, the money I'm going to have in my account in order to put this on is a difference in the strike prices, which is $1, minus the 41 cents. So that's 59 cents, okay? So this is almost a 70% rate of return that I could potentially get if I got nice fills here on this, because it's a net credit of 41 cents on this trade on the 45.50, 46.50 call. Okay, now again, both of these, while they're not as aggressive as putting on a put spread or a call spread because you're short, I'm on the other side of it, they're still relatively aggressive plays, okay? I would say that yesterday's stock trade that we put on was less aggressive than this because we went a little further out of the money on each side of the equation there, right? This one, we're right at the money. So the stock essentially does have to move a little bit in our direction for us to make money on it. But again, the payoff is much better. Where yesterday we were talking about maybe getting 30%, here we're talking about 60, 70% rates of return on these. So yes, more aggressive. Yes, lower likelihood of them working out for us, but the payoff is better. And again, it's a step down in terms of the risk of actually losing your money. It's a step down from going long on either side of these equations right now. Okay, so in my humble opinion right now, am I bullish or am I bearish on shares of Wells Fargo. That's an angry, mauling grizzly bear right there. Because I am bearish on Wells Fargo. So that's why I'm putting together this bearish options trade. Now, I had a little bit of trepidation surrounding this one, okay? Because the stock has rallied off of lows on several occasions, okay? And it kind of seesaws its way down. But what was the tipping point for me was the lack of growth that I'm seeing in the EPS estimates. When that growth starts to disappear, then valuations tend to contract, okay? And when that happens, that's when stocks start to unwind a little bit regardless of what the EPS is, right? The EPS can stay stagnant. If you don't have the growth premium, we're going to shrink on back down, okay? And since we saw those estimates negative coming down, crashing down, and you're not going to have a rate hike till December at the earliest, that sets the stage for me to be bearish on Wells Fargo. Notice I didn't say too much that the scandal is the reason, because the scandal is a nice sort of an incendiary device to get this thing going, right? It's what's going to get it cooking, but that's not necessarily the underlying reason why. So it's very important to be cognizant of what's happening in the market, in the news, but don't get it twisted. You got to take a look at that price consensus and EPS surprise chart, because it's going to tell you all about it. Now, Zach's Live Traders, guys, don't forget, tomorrow, the good, the bad, the ugly trade review. So you'll see how I'm going to manage these positions that we've talked about throughout the course of the week. And if you're not signed up on Zach's Live Trader, you are not going to get access to that video, okay? So make sure you shoot me an email, livetrader@zax.com, so you can get hooked up with all the info you need, the free 14-day trial, and then the whopping $9.99 a month it's going to cost in order to be a part of this. That's nothing, guys. $9.99, at less than a cost of one trade, okay? So it's nothing. Hang out with us. Let me be your guide. Let's do it. So again, I'm taking suggestions as to what you guys want to see next week in terms of earnings. I'm going to pick like 3 videos and do this all over again. One of them, of course, will be behind the paywall. So again, thank you guys so much for hanging out with me here with Zach's Live Trader and Zax.com. I'm Dave Bartosiak, and I will see you next week. Have a good one.